Yo, what's up, YouTube? What's up, guys? It's been a minute. It's been uh, a minute that I've been gone, and a couple of things have happened in my absence. The last time I think I was talking about getting a payout, so I did. I did request for the payout and everything. However, a situation happened. So they previously sent an email telling me that I had a trade where I got a margin breach on one of my trades. So they kind of deducted the money um that was accumulated on that trade, and they basically took that amount of money out. After they did that, that's when they saw that I only had about like $30 that I was withdrawing. So those $30, they weren't necessarily. Oh, what was this? This was a crazy spike. Oh my God. So those $30 didn't necessarily accumulate to anything. So yeah, as you guys can see, it says here withdrawal is at 250. Yeah, so I think when was the last time? Let's just do this so we can see when was the last time I withdrew it here. This was on the 28th of July. So since the 28th of July, I've been kind of just trading here and there. Slow price action for August. Honestly, it was very choppy. I didn't have the greatest August experience. We had a couple of losses in the beginning, followed by break evens, more break evens, a loss there, some losses over here, break evens over there, some losses here, break evens, losses, and then I think was it on Thursday? I think it was Thursday. This was on the 26th of August. I finally hit a TP, which kind of covered most of the losses, but not entirely because we are still down on our account. So we are down about $155, considering we need to have 5K and above. So yeah, this is a 5K. This is still the same 5K account, so nothing has changed. I haven't blown it or anything. Um, I did find a different way of trading my strategy in terms of price action, and this is what I actually kind of want to get into with you guys. So I'm just gonna go over um June and July. I want to show you guys how I see my setups, and I actually give you like a proper breakdown of my trading strategy for gold and then for Nasdaq as well, because I trade gold in the Nasdaq. So let's just jump right into it. This is what we're here for. We're here for the charts. So I did mark, and I did not mark, but I did like give you guys a little um checklist that you can use. So it's typically daily fair value gap or 4-hour fair value gap that we are looking for. Either it's to the down or to the upside, depending on the trend. Resistance, I mean retest, sorry, it must retest that fair value gap. After you get the retest, you need a candlestick closure. Let's put your candlestick closure above or below EMA. Yeah. So now you need a candlestick closure above or below the EMA. Cool. So typically what I do now is, guys, I have a different system. So my first outlook on the markets, whenever I'm trying to find out what am I going to do for the month, how the monthly outlook is going to potentially look, I sit on my hands for the first week and I wait for markets to show its hand. And the way markets show its hand is it gives me a daily fair value gap. So once I get the first daily fair value gap of the month, I then initiate my selling opportunities from this month, right? So as you can see, markets retested into this daily fair value gap. We're going to go have a look at what happened in this daily fair value gap for me to catch an entry. We also did have fair value gaps that were formed going lower. However, the time I got a retest, it was a Friday, and I do not trade Fridays. Monday, it opened up with a gap and it actually swept the highest point of the daily fair value gap that was formed here, because you can see there's actually two. There's this fair value gap, and then there's this fair value gap right here. So we have two fair value gaps that were formed, and markets completely just swept all of it. So it kind of didn't respect this fair value gaps. So I wasn't looking for any sells from that area. However, we also did initiate another daily fair value gap down here for us to then take sells from. And then I think our last fair value gap of the month was right here. We had this one. We had two actually. We had the one at the bottom and the one at the top. However, markets decided to retest the one at the bottom. And we always just trade off of what markets are doing. So if the market has two fair value gaps, typically the first fair value gap, the closest fair value gap on the daily time frame is the one that, the most recent one basically, is the one that we're going to look at. So that was the daily outlook. Those were the only daily fair value gaps. And I was mostly primarily looking for bearish opportunities. The only way I would look for a bullish opportunity is if markets created two bullish fair value gaps going higher. So basically, if markets did what it did here, but going higher, I would have then changed my bias to bullish. So for the month of June, we were technically looking for some bearish setups. I already have the entries in because I was doing a bit of back testing, and also um, some of the trades I had also taken. So as you can see here on our 4 hour, we were only going to be looking for 4 hour fair value gaps going lower. We do not care about any other fair value gaps that markets could be trading towards. We also had this 4 hour fair value gap right here. However, there's a reason why I don't also just take any random fair value gaps. Fair value gaps shouldn't be in an area where liquidity has been um, either taken or a low or a high has been um, taken out. So basically, if I zoom out and I look to my left, I can see that this is the lowest point of the markets. Markets are literally taking out this low. So there was major liquidity sitting right here. I'm not going to be keen on taking this fair value gap because it could be manipulation for sellers to continue thinking that markets are going lower. That's why we have a lot of consolidation here. And then literally markets spiked up, stopping everyone out of their trades. So I don't take fair value gaps that present themselves at lows or highs of the markets that have been just taken out. Also, um, when I'm trading the fair value gaps, I'm not focused on the bullish fair value gaps, no matter how many times it presents itself. Even this fair value gap right here, I was not going to be interested in it for two reasons. One, it's on a Friday, and two, it's a bullish fair value gap. I'm looking for bearish sentiments. I'm looking for the bearish setup. This is the system that I'm trading. It has a very high tolerance of patience that you need. If you're not a patient trader, if you're not looking to capitalize on big gains on the markets, then this setup and this system isn't for you. You can leave. But for those who are patient enough to make um, consistent trades and start to understand, because this is like also kind of new for me. I kind of developed this during my process of this funded account challenge. So there's a lot of like losers and winners, as you guys can see on my history that I've showed you guys over here. Like you can clearly see that I've been experimenting with this account and I've already requested a withdrawal But from the first time I've started to trade this 5K account, we can literally go back and see all the wins. The wins are a lot. Majority of the wins are higher than the losses. Here was like a basically $100 day. Here was a 230. Then we have big, small little losses. Typically, I like to risk about $50. And then if I have slippage in these cases, then that's kind of something I can't really do about. But usually $50 to $60 is how much I am risking. As you can see, anytime I win big. I had a massive losing streak here because I was still experimenting on this system until I finally got a very big win over here. And this win literally covered all these losses and then gave me even more for me to withdraw. Unfortunately, we didn't get the payout because they kind of took the money due to this trade over here. I think, yeah, this was the trade that they deducted from my setup because there was a margin call on this trade. I used a very big lot size. I used zero point 0.1, and then I also added to the position with the 0.02. So that's when I got a margin call, and then they kind of told me that they have to deduct that amount from my withdrawal. So as you can see, if they deducted that 248, I didn't necessarily have any money left. So yeah, that's what pretty much happened. And then here, as we continue, you can see we have our small losses and blah 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 until we got here. So that's pretty much the idea when it comes to the setup that I am showing you guys. We just got to be patient. Yes, there's going to be losers, there's going to be winners too. And when you win, we capitalize on the wins all the time, guys. Like, we make sure that our reward is way bigger than our risk. So always remember to just take a good risk to reward setup rather than trying to catch the full move or whatever. So yeah, as we can see here, we also had a daily. This was the daily fair value gap. We're going to look for shorts from here. We had another 4 hour over here. So we can look for shorts from here. On this 4 hour, markets closed below, right? We had a closure below. On top of that, we also had a 4 hour fair value gap. Now, I know I told you guys if the 4 hour fair value gap or a fair value gap is being formed at a major low or high, then it's more likely you should be staying out of the markets. This was on a daily time frame. So if I go to my daily chart, you will see that the reason I didn't take it was because the higher time frame tells the story, right? And on the daily, markets had closed with this daily fair value gap on that day, right? Then on Thursday, markets were doing whatever they wanted. If I was to trade on a higher time frame, I would have needed this daily to get retested and then not focus on the lower time frame. That's why that 4 hour didn't work. It's kind of it will start to make sense to you why I do these things. You also have to go and back test and see the reason why it makes sense, because I've been doing this for a very long time to know why I'm not actually taking every single fair value gap. So yeah, we had a 4 hour there, and then that was pretty much it. So when I go to my 15-minute now, this is where things get interesting, because now you guys are gonna see the types of entries and how I enter and how I take the trades and how I get the setups that I'm looking for the month. So remember, we were looking for a bearish setup. We were looking for sales the whole month. We were just looking for sales. We were not focused on anything complicated. We were not trying to guess where the markets are going every single day. We just had a simple setup where we were looking for shorts in the markets. So what did it say now? Okay, daily fair value gap or 4 hour fair value gap? You have a daily fair value gap? Yes, we do. Then what do we get? We need to get a retest. Did we get a retest? Yes, we did. We got the retest right here. I can remove this because we don't really need that. we got the retest right here. So as you can see, this means that that retest is check 2. Now, candlestick closure above or below EMA. If I want to sell, I'm going to need the candlestick to close below the EMA. And the EMA that I'm looking at is this red line. The reason I'm looking at this EMA red line is because it's a it stands for like the support breaking into resistance. This is like my resistance line. So anything below here should be resisted and continue to go lower. So as you can see, something like this, where once it gets to the red line, we need it to continue. That's how I know we are in a downtrend. So markets retested and then closed back below. Now typically I prefer if markets push up and then leave a little gap in before closing back into these lows. However, this candlestick, if you guys know your candlesticks, this candlestick showed very high rejection and buying pressure. So it was quite obvious that I had a liquidity sweep right here and a retest of my daily fair value gap. So I just simply enter the markets for a 1 to 3 because the lowest point of this TP that I had was over here. So this was going to be where my TP was. So I'm not trying to predict, I'm not predicting that markets are going to rally all the way down, you know. I'm just predicting where markets are going to retest and where markets are supposed to go to take out the most recent liquidity point. So in the downtrend, this was going to be our TP, and we made a 1 to 3. Reason why my stop loss is above here is because I know that when we have a very strong candlestick rejection, we never fill 50% of this candlestick. So you don't have to now go and put your stop loss all the way above that candlestick wick. It's just going to be a very huge stop loss. If you do that, it's still fine because you were going to catch at least a 1 to 3. However, it doesn't seem necessary because generally, if it goes and fills a 50% of that, it's most likely going to first take out that high. So yeah, and then coming into, and this was literally on the 9th of June. So from the 1st of June to the 9th of June, you waited 9 days. You waited 9 days and you got a 1 to 3 stressless. It was stress free. And then literally the next day you got a 4-hour fair value gap. And this is the perfect example of what I was talking about, where markets retest and then here's our low, so we're targeting that as our take profits. It had a retest, it went above our EMA with a gap. So you guys can see that there's this gap right here. So this gap right there is literally what I'm also trying to see. However, now when I get a candlestick closure on the 4-hour, this is a 4-hour fair value gap. I use the candlestick that closed, the high of that candlestick is what I use as a stop loss. I do not use the full range. Only if it's a daily, I typically use the full range. But for the 4-hour, I use the candlestick. So this candlestick, my stop loss is above here. And this is how we make this is how we capitalize on how patient we are in the market. So because of we wait a long time, when we get a setup, our spread, our entry is so precise and our stop loss is so tight that we capable of squeezing a 5R out of this market. And we literally got this setup at 9, and at literally 10 o'clock, an hour later, we hit a 5R, 5.3R setup. So you can see that as much as we might had to have waited for basically 9 days to catch that 1 to 3, we've had basically an 1 to 8 R trades so far that have hit take profits. Do you guys understand what I'm trying to say? So it's not about being in the markets all the time. It's about being in the markets in the right direction and trading when the setup presents itself. We don't care about the other days. Anyways, moving forward, we get a new fair value gap over here. So now on this fair value gap, we always look to trade after 8 o'clock. So from here, this was 8 o'clock right here. What did I see? I saw that the 4-hour had a retest, right? Which is perfect. That's exactly what we want to see. Did markets close above and then close back below? Yes, it did. And it created a fair value gap. Now, this is the second type of entry that I look for. If markets create a fair value gap above the closure, so if markets close and then it has a fair value gap that it has created, we typically enter from the fair value gap going lower. However, I only trade from 8 o'clock, so I only started trading here. And what did markets show me? It showed me a fair value gap again. So I used that fair value gap to then continue selling. And as you guys can clearly see, it stopped me out. I'm not trying to give you a strategy that is 100% foolproof. There is no such thing. Get that out of your head. This is just a very high risk to reward strategy where you can capitalize on the markets. However, it does require patience because you can most likely get 3 trades in a month, but you'll be making 14R in a trade, sometimes even 5R. Your minimum is 3R. So you know that if you get 3 trades in a month, and they all hit TP, that's a 9R. That's 3,000 times. Let's say you're making 3,000 on the trade. That's 3,000 times 3. That's 9K a month. That's still a good return. So you gotta just start thinking of this as more of a business than less of a gamble. So yeah, we got the stop loss. That was unfortunate. These things happen, guys. I'm not trying to sugarcoat and make you think that this is the holy grail. This you've seen it. You've also seen how I had to struggle to figure out how I'm gonna trade. So you can see that the losses are that I show you the losses to remind you guys that as much as you find so many traders out here showing you the wins, showing you the nice cars and everything, the losses are there. Have they do not have a clean streak. No one has a clean streak where they're just winning. Okay. So yeah, here we had markets tapping into the 4-hour fair value gap, right? In this case, we had our markets close right back above here, and then what happened? We closed back below, right? This was early in the morning, so I'm definitely not awake for this, but it would have retested into the fair value gap as well, and then continued going lower. Now I wake up at 8 o'clock, and at 8 o'clock I see that markets are already showing the bearish direction, and it has created a fair value gap. Now I know you're gonna ask me, why aren't you waiting for the retest of that fair value gap, blah blah blah. Well, for instance, when I got this fair value gap, I waited for the retest because I didn't like the range. My range was actually supposed to be, my TP was supposed to be here. So as you guys can see that the moment markets got here, I would have had to go to break even because after markets take out a low, it can go and take out highs. However, on this setup here, I had a larger range to target down here. So what I did was I used a breakaway fair value gap entry. And a breakaway fair value gap is typically when the third candlestick body closes below the previous second candlestick's wick. That is a breakaway. So sometimes breakaway fair value gaps do not get a retest into them. And it's also a signal and a sign of bearish or bullish momentum in the market. So I just used it as a breakaway. I still used the original high because if it was to retest, it can retest and then continue going lower. So I still accounted for the room of the probability that it needs to retest if it wants to. We just don't know that. So that's why I took it as a breakaway. And then I made another 5R. So as you guys can clearly see, in June, we've lost 1 trade and we've made about 3 wins. 1 5R, 2 5Rs, and 1 3R minus 1R over here. So we've already made 10. the 12 hour. This is a 12-hour month, and not all months are gonna be as good. But I'm just saying, like, really if you really stick to the plan and stick to the system, I can guarantee you profitability. That's something I can guarantee you. Nothing other than that. But yeah, here we got a retest into our daily fair value gap. So if we're getting a retest into our daily fair value gap, it's clear that we need markets to retest, close above, close back below. Now, you're gonna be like, oh, there was a fair value gap right here. Why aren't you using this one? Well, for starters, I wake up at 8. So I only start trading at 8. And the highest fair value gap is the fair value gap you should be using. And it mustn't be mitigated. So it means markets mustn't retest it. I don't think about how the wick must go fully into, no, just the retest. If markets have retested it, then you can look to start trying to trade the next one. However, markets did not retest the highest fair value gap. So I looked at it and I was like, oh, once I got a retest in there, boom, I'm in. That's my fair value gap. And then it's a daily fair value gap that we're trading off. So I use the high. I use the high of that daily fair value gap. And then look, markets pushed, had a little red situation going on, and then eventually started to push lower and then hit TP for a 1 to 4. So from that 12R, now we're adding another 4R. That's already basically a 1 to 16R for the month. For the month, like, it's quite powerful how everything just falls into place when you look at this, when you get this strategy. I'm going to show you guys the setups that I kind of missed this month and or should have taken, and the ones I did take. So stay tuned for that. Anyways, on the 4 hour, we literally have markets retesting in here. What time do I start to trade? At 8 o'clock. So from 8 o'clock, which was here, we had to wait for markets to come and retest and then close back below. Now, when you are trading this setup, you've got to be careful, because it's not going to always want to present itself the nicest way. And when you zoom in, you can clearly see this is the smallest, tiniest fair value gap that you can get. But it's a fair value gap. And it's a crucial fair value gap, because that is what the markets do sometimes. It doesn't always clearly show you its hand. Look at how when markets tapped into this fair value gap, this candlestick literally rejected off of it. Isn't that ironic how markets rejected off of this tiny little fair value gap? Of course, it still pushed up a little more to do whatever it wanted to do and maybe scare some people out of their trades. But we follow our system. If we have a fair value gap, we use the high of the fair value gap, we wait for it to continue to go into our favor. If it hits stop loss, we come back the next day. And this was a 3R trade. So now we're already up another 19R on the month. So you can see that the risk to reward and the strategy, when it presents itself, is very rewarding. And you wait a couple of days here and there, sometimes a week, but the wait is worth it. Honestly speaking, the wait is worth it. And as you can see over here, we had a daily that had retested into this. Now, I told you guys I do not trade on Friday, and markets retested this on the 26th of June on a Friday. So I am out of the markets until Monday, 8 o'clock. That's just the discipline I have. If you want to trade on Friday, by all means, get manipulated. But I guarantee you right now that if you were going to trade on Friday, you were going to get stopped out after you got a closure below here and your stops were above the high. And you're going to ask yourself, the system doesn't work, blah, blah, blah. I told you I do not trade Fridays. Why? Fridays are high manipulation reversal days. So although your setup shows itself properly, it can manipulate before actually going in your intended direction. I've noticed this. I've been trading for a very long time for me to see that in my case and my system, Fridays are just not good days to trade. So I've completely eliminated it from my trading strategy. However, when I wake up now on Monday, I can clearly see that Friday has respected all its fair value gaps except for this one. This was the last fair value gap that markets did not retest at the time of me coming into the charts. So, me being the trader that I am, I was like, okay, if I want to see markets continue going lower, I'm going to wait for the retest of this 15-minute fair value gap, put my stops at the high of the range. And the reason why I'm saying the high of the range is because markets went from here to there, right? And broke structure. So markets broke the structure, pulled back, and then created another break of structure down here. So as you guys can see, it keeps on breaking structure, then breaking structure. So now here, it literally had a situation where it had not enough market structure or not enough pressure to continue going lower. So we needed the retest. Once we got the retest, that's when we got our break and close below, and markets kept on going lower. So I got the shorts from there, and it was a 1 to 5. So basically, I was at 9 to 19. So basically, 24 are for the month of June. So if you're telling me that you don't want to wait and be patient for my setup when it can potentially have gotten you a 24-hour setup in June, then damn, cool, bro. Cool. And if you want to see the results that you could have got in July, I'll just run through it real quick so that I can get to, I don't want to make this video too long, but yeah, so I can just get to the what's going on. Okay, just refresh that. Yeah, so I can get to like the current month that we're in, because I know you guys kind of don't really care about what happened in the past. We want to see what's currently happening. So in July, I think we had like four trades in July. Yeah. So we had four trades in July. I'm just gonna tell you the reason why I took the buys, because I know already. There was a daily fair value gap somewhere around here. Markets had retested into it, and we had a nice push. We bought and we had a nice push up. However, markets weren't ready to continue going higher and stopped me out. Well, it actually, I moved my stops to break even, and it took me out at break even. But if I don't really go to break even, so it was just on this day, on the 4 hour, it looked like manipulation was happening right there. So I was like, you know what, let me be safe, and I went to break even. However, I count this as a loss. So you were gonna lose, and then I think we waited a while for at least a 4 hour setup. Yeah, we did. And then over here, we literally got a buy, closed above. It retested into a 4 hour fair value gap, closed above, and then stopped me out immediately. So that was like literally one candlestick that told me, yeah, bro. And as you can see, I do not revenge trade. I do not try and hop in now that markets are starting to go back up again or whatever. No, you lost for a reason. And if I was going to try and do that, I was going to get stopped out multiple times, as you can clearly see. So you take one trade, and if it doesn't work, you wait and you just trade the next setup. Don't try and get into another setup and be Superman. You're not Superman. So yeah, we had a 4 hour fair value gap. Markets retested into it, and then this candlestick closed above. And as you can see, we closed below the blue line. So these are buys. Remember, we we're doing sells and we we're closing below the red. Now here we're closing below the, closing above the red. Now we're closing below the blue to close back above. That's another indication that we're ready to buy. And then stops below because it's a 4 hour fair value gap. So we're using the candlestick, not the full the full low. And once markets take out these highs, I go to break even, and markets just continue to go higher. So that was going to be a nice 1 to 3. Simple. And that was, I think, your first win after two losses, I think. Yeah, so that was gonna be a 1R. You're gonna be up 1R, which is a very slow month. You will have those, but we got another retest of a 4-hour fair value gap over here, and then we made a 1 to 6. So you have 1 to 7R for July. And if you put that into perspective, that's $7,000 that you could have made. So your capital also is important in this case, obviously. If you do not have a very large amount of capital, then I suggest getting prop firms. Try gold funded, because you can get a 5K prop firm for like you can get a 5K account for like 300 rand if you're in South Africa. So it's like $17 basically. So yeah, but that was pretty much our setup on in July. And then for the month of August, I this is actually the month that I started looking to trade the way I'm showing you guys now. So uh, I saw markets, it created a daily fair value gap right here. So this daily fair value gap was basically the confirmation that I needed. I didn't, unfortunately, didn't get a retest of this daily fair value gap, and then markets continue to buy, right? So as markets continue to buy, I went to my 4 hour, and I wasn't satisfied with taking a 4 hour fair value gap entry here, because I prefer for markets to retest into the lowest. Just like how when I get an entry on the 15 minutes, I want the lowest fair value gap to get retested, and then I'll go for the longs. So in this instance here, we didn't get that. Um, the 4 hour did have a retest of this fair value gap. However, it's not like the daily fair value gap. So I do not want to see markets liquidate highs first when it comes to the fair value gap. So this fair value gap right here, I do not want to see markets take out the highs before taking out the lows. So I would have ignored this fair value gap, but we can go down and see what happens. And most likely, sometimes it does work out, but I've just, the way I trade and the way I analyzed, I saw that it's a very risky system, trading system that you just don't want to have. Honestly, it's not a good setup for me personally. So I would have had an entry right there. As you can clearly see, markets pulled back, retested into 15, closed back above here. Now I would have then been targeting all these highs. So it would have been giving me a nice risk to reward, but at what cost? Because I got stopped out. And then only it went to hit TP. So you see, it will give you manipulation, because now we're not following the the setup, or the fair value gap strategy that I use. As you can see here in this fair value gap right here, markets retested before going lower. This one, markets didn't, but it stopped us out. This one, markets didn't sweep the lows before retesting. So we take it. Another 4 hour here. The ones that have worked, markets don't retest the lows. They retest the fair value gap before taking out the lows. Same system would apply with all the other ones. Uh, Same here, 4 hour here. Markets retested into this 4 hour fair value gap. I'm not saying that this one won't fail, because here it did fail. This was a normal fair value gap right here. It did fail, but it's more likely to work out than the other ones for me personally. So if you wanna try trade the ones where the markets take out the highs and then still retest, just be careful of that manipulation. That's all I'm gonna say. So yeah, we eventually got a retest of the daily, but I missed it. And this is one of the trades that I wish I had taken this month, or because I'm currently basically down on the month. Uh, this daily right here. So markets see with the daily, it's a different story. Daily can do whatever it wants because it's a higher time frame. If it needs to take more liquidity before coming lower, then it will take more liquidity before coming lower. Once it retested into there, I went straight to my 15, or I should have went straight to my 15 minutes. And on my 15 minutes, now I want you guys to see how disciplined you have to be. This is Friday, and Friday our entry was literally here. Markets closed above there. So that would have been your entry, but you don't get the entry until Monday. And on Monday, 8 o'clock, you're all the way above here. Now I'm not taking buys. I'm not taking buys on this setup at 8 o'clock on Monday all the way up here when the range itself is just showing me that it's in a premium and discount. So this is the full range that we're looking at, right? If I draw this, you can clearly see this black line is showing me 50%. So this black line over here, 50% of that. And we are literally in premium. So markets, you're going to be trying to buy markets at 50% of its range. And that's just not a good range. I prefer to get a retest of the entry or let it go. And that's what happened. It had a retest of this entry. And I didn't notice that it was retesting the entry. And then boom, shot up for a nice 1 to 5. So yeah, very solid setup that I had missed. And then I think I also missed I think I missed this one too. Yes, I did. Um, on the 4 hour here, markets were pushing back. So the reason I missed this one was because I was waiting for markets to pull back and retest this 4 hour fair value gap. Instead, it retested the middle one and then continued going higher. So that's the reason why I missed it. But it was going to give you a nice 1 to 3. And then I recently took this one on the daily, and here's why. And this is why. This is also something I think will get you guys realizing that I'm not trying to sell you a holy grail. I'm showing you a system that I trade that has showed me some profitability. It's passed so many funded accounts. Like, yeah, you guys have seen the journey. I've passed quite a few funded accounts already using this type of system. So on this daily, we got a retest of the daily fair value gap, right? However, unfortunately for me, markets had I can delete that. There's nothing. Markets I entered on Wednesday. So here's the entry if you guys want to see. It was this one. Gold buys. This was on Wednesday, 26th. See the 26th? If I go to my charts over here, you'll see Wednesday, 26th. So this is the exact same entry that I took on that day. And it gapped up nicely, but eventually came and stopped me out. And that's just how it is. So now you're probably asking yourself, if it does stop you out, then how would you know to continue buying since we're supposed to be buying for July? Well, I would have had to then now technically wait for a 4 hour fair value gap to show me that it's still continuing to buy and it's just liquidating. Did I get that? No, I didn't. I did not get any 4 hour fair value gap going higher. And now you can clearly see it's tanking. So it's a good thing to also just accept the loss and then wait for extra confirmation. And my extra confirmation, if the daily doesn't work, is a 4 hour fair value gap being formed. So yeah, that was pretty much it for um the for the gold setups. And then for my Nasdaq, I think I had these two trades and this winner. So it was this winner for the 200, and then I had those two that I lost that I'm gonna discuss right now with you guys. So for Nasdaq, right? I typically approach it a bit different. So anytime I get a retest of the fair value gap, I need to see the first retest needs to get um, swept before I enter. So I'm just going to show you this example of why of the losses I took and the reason why, and then I'm going to show you the win I took, and still within the same parameters. So this was the 4-hour fair value gap I was waiting for to get retested into. As you can clearly see, it created two fair value gaps. However, this is a fair value gap right there. This is not liquidated. So markets didn't push up before coming lower, so it's still valid. And the reason I am looking for buys, even though for a couple of days it was bearish, is because when we started the month with a daily buy. So we had a daily fair value gap that markets created, and then we had another daily fair value gap that markets retested into. So if I'm now going to my 15-minute, I need to identify the first retest of that 15-minute of the daily fair value gap. I need to identify what where was the first retest. From there, I need to see markets actually take out that low, and then I only start trading. I only typically start trading it in the New York session because Nasdaq moves much better in the New York session. I take I take London session only if I'm using 4-hour fair value gaps, but if it's on a daily, I typically take it in the New York session. So here at 3 a.m. there was the first tap into that. So that was our liquidity run. So markets actually pushed and it took out all of that. Now, if I was to trade at 8 o'clock, which was here, you can clearly see that I was going to first have to wait for the liquidity grab, then the closure around 11, and I was going to get stopped out immediately. And the reason is because London session and New York session, they don't move the same. Like New York session is where the volatility gets kicked in for Nasdaq. So anything other than that, if it's not on the 4-hour, I'm not really interested in trading the London session. So here we had markets pulling back, then closed above. Now, what did I remember when I told you about the a strong rejection candlestick? As you guys can see, markets pulled all the way down here and then closed back above here. So I just used the body low, like 50% off that candlestick, and then I targeted the highs. But unfortunately, I also didn't take the setup. Oh no, I did take the setup, but it was a break even. Yeah, I moved break. I don't know. I forgot the reason why I moved. Oh, I was watching some of the streaming platform. It's PROPFIRM match. Yeah, so it hit a 4-hour fair value gap, and the guy in the stream had said that it's rejecting off of that 4-hour fair value gap. So it hit this 4-hour right here, and the guy was like, "Yeah, it's rejecting off of that. It's gonna go lower." And I had just woken up, so I kind of panicked. So I was like, you know what, let me go to break even, and then it stopped me out at break even, and then it smashed for a 124. Crazy. I was like, wow. So yeah, I actually stopped following that account because it kind of messed up my psychology a little bit. So it's also another thing, you shouldn't always watch too many traders when you are trading because you're gonna start thinking too much about what they're saying and not about what your system says. So yeah, let me just jump into this setup. Remember, we're looking for buys. It hasn't the daily hasn't given me more than two fair value gaps going lower. It's only given me one. So it's only given me this daily fair value gap right here. Now, is it to say that markets could reject this fair value gap and continue going lower? Probably. I wouldn't know. I wouldn't know. So, and plus it's a Friday, so I wouldn't care. So what I'm going to do is I'd rather wait for a 4-hour fair value gap to form, or for me to see another daily fair value gap going lower. However, we are about to finish off the month. So on Monday and Tuesday, the month is a new month, and I'm going to need a new fair value gap for September to give me direction. So if we are going to be bullish, we're going to create a bullish fair value gap going higher. If we're going to be bearish, then cool. It would have probably respected this, given me confirmation for me to then continue selling. So you see, I don't have to predict anything. But anyways, let me just get right into why I am what's this why I took why I took those setups, these ones. So as you can see, we lost 50 and then we lost 40 and then there was a break even that I had on NAS. Because I had entered two, but then this one that I entered was a bit higher than this one. So I kind of closed it out early. I wish I held it. So yeah. Anyways, 4 hour got retested. So let's just drop down to our 15 minutes to see price action. And on our 15-minute, this will clearly show you that I had rushed. There's no other way about it. These were just rushed entries. I got too excited and I didn't wait for the simple confirmation candlesticks that I needed. So, for instance, this was the first retest of the 4 hour fair value gap, which means the first retest. This is NASDAQ, guys. It's not gold. Gold we enter on the retest. Where's my? Ah, let me do this. Where's my? Yeah, I need this. Let's just put it here so you guys can see. We'll just put it right here at the top. And then we'll say it needs a retest. And then after the retest, liquidity sweep. Ugh. Liquidity. Let's just say liquidity. Liquidity. Ugh, man, Jesus. Sweep. It's fine. So you can understand properly. So after the retest, we need a what? A liquidity sweep. This is also why it's important to have the checklist so you don't forget. So I did not wait for the liquidity sweep and I entered and I got paid. I paid for it. Then I tried to re-enter again and I paid for it. Then I got the liquidity sweep. You can call it whatever you want, a sweep, a run. It just needs to take out the first retest level. It must just take out the low or the high of that. And then we must get a candlestick closure above. Now, reason why I exited the first one was because I had entered roughly above here. So I had entered this as my entry, my first entry. I wasn't waiting for the retest of there, which I should have. So when markets decided to go back above there, I went to break even and then it stopped me out. However, on this one, I saw markets retesting into the 15-minute fair value gap. The lowest, remember what I told you when I was like, it must retest the highest or the lowest 15-minute fair value gap. So this is the patience you need. I was actually supposed to have just placed a buy limit over here. So I missed out on making way more just because I forgot to like put a limit. However, I entered and then markets gapped. So markets had closed by the time it hit my TP. As you can see here, 22.45. This is the next day. So it actually gapped up and it hit TP for 200 and something dollars, which was right here. And that's how I basically made my 200. Yeah. So you see here, this is the entry I was talking about. Why is it not? No, not that. This. So you can see here, we had this one at the top. This is literally the entry I was talking about. So you see here we had our losses, and then over here we had our first entry, which was above here. Then here's our 15-minute one that I entered down here. So this one got break even, and then this one closed and then gapped up and opened here. So the TP actually gapped up and it hit TP at a higher TP than I originally had, because my TP was actually here. So that was quite nice. It was actually I made a I think it was how much? Let's see, because it showed me here. So it was like a 1 to 6. Yeah, a 1 to 6 art setup, which wasn't too bad. I wish I had risked a bit more. I think I had risked about 30 something dollars on this trade. If I had risked 50, I would have had quite a bit more. Quite a bit more, but it is what it is. And yeah, that's pretty much it for me, guys. I hope you guys understood. Um, if not, you can just rewatch the videos, go back test, take some notes or whatever. Do whatever you feel like. But yeah, for me personally, that's just how the setups are. That's how I trade, and I'll see you in the next one.